On all things autos here this morning is Mark Degennaro from Gruppo Levey and Company, Managing Director, joins us this morning. Good to see you again, Mark.
Good to see you.
Thanks for coming in. You know, we've talked a number of times when you've been on because you operate in these markets, distressed markets and takeovers and what have you, about the autos. Yep. Where do you think we stand on well, we could start with Chrysler. The bankruptcy proceeding is going through here, and maybe what that'll tell us for General Motors.
The bankruptcy proceeding is going forward. The news of the day is the cutback in dealerships.
Yeah.
Not surprising. We all knew it was going to come, and I think now we're seeing what's happening in Detroit now start to really impact Main Street.
Is there anything, right, it's a real story. Yeah. We talked to some dealers. We talked to one on our internet show. It was really sad. I mean, just emotional. You know, his dad had worked in the business, and he almost broke down on the air, just so emotional with what was happening at Chrysler. But that said, is there anything about the idea that this Chrysler bankruptcy is, as you say, going forward, that we can take away from General Motors to say, well, this is possible, the world won't end, or no?
Well, I think there's going to be a lot of lessons here, and Chrysler is the smaller of the two, and we're going to see how it unfolds. I think there's a number of tests that are coming up. The first test here is the dealership. Yeah. And if we focus on that for a second, that's going to be an interesting. It's going to be an interesting analysis. I think at the end of the day, those dealerships go away. As you know, these networks were built at a time when Chrysler and GM had a much larger share of the U.S. auto market. The Japanese car makers and the European car makers obviously taking a lot of that away. So I think what we'll see is a fairly significant reduction in the number of dealerships. I think it has to happen. The networks are incredibly inefficient at this point.
All right, so that brings us to General Motors. We'll talk about this a little bit more in detail later on in the hour. But what are the odds here that, what odds would you place on General Motors avoiding bankruptcy? Is there any odds?
Slim. I think they're slim. I think, first of all, I think Chrysler was an easier case to get your hands around. A lot less debt. As you know, GM has $27 billion in outstanding debt, and they haven't made much progress. And I think it's good news that they're making progress with UAW, but they've got to deal with the outstanding bondholders, they've got to deal with pension liabilities, they've got to deal with health care liabilities, they've got to deal with the UAW contract. It's a much more complicated process.
What's the difference? There is a difference, right, between what's happening at General Motors and Chrysler in terms of the bondholders. I mean, secured versus unsecured.
Yeah, well, the bondholders in GM are largely unsecured. Right. So they stand further down in the chain. So they haven't made any progress. The offer on the table, I think they think is fundamentally unfair. We'll see. As you well know, as we get closer to a deadline, parties tend to give a little bit.
Some kind of a last-minute deal.
But there's no new offer on the table. What we've heard so far is that the offer that currently on the table for 10% of GM stock is really the offer, and there won't be a new one. So we'll see.
All right. Again, we'll talk about that more later on in the hour. Mark, thanks for coming in this morning. Ashley, back over to you in London. All right. Good morning. Gruppo Levey's Managing Director Mark Degennaro is with us. So we'd heard for some time that the insurance companies would want the TARP. Kind of ironic they want to get in while all the banks want to get out.
Yeah, it is kind of ironic. This is not unexpected. As you know, they all filed for bank holding company status back, I think it was in November. Life insurance companies play a very critical role in the credit markets.
Now tell us how, because they own a lot of
they take your premiums and they make investments. They make investments in all kinds of asset classes. And like everyone else over the last year and a half, they have suffered some significant losses. Yet they have to maintain certain capital requirements to be able to pay out.
If somebody claims now. So does this do anything to stabilize markets overall?
I think it does. I think it's actually a good thing, because now you have companies that are in the insurance business are now properly capitalized, and they're able to pay on those claims. And there's no question that they're going to be able to pay on those claims. So that's a good thing. That's a stabilizing thing.
All right. So they're in a different boat then. I guess maybe the logical conclusion would be, if some of the banks do start to pay back the TARP, the government, you kind of reinvest in these insurance companies?
I think that's what's going to happen. I think you've heard lately that some of this money is going to be recycled. So the big question, and the questions everyone's going to raise, is, well, now you've got the money. That's a good thing. It stabilizes your company. Do you really want the restrictions that come along with it? So we'll see how that plays out.
Is that less of an issue in that? I don't know. Maybe it's not. Is that less of an issue in that industry than it is on Wall Street, where the salaries are higher and people are so worried about compensation?
I think a little bit, but it's still there. It's still an issue.
So they're still thinking about it as well. Is this the end of the line, by the way, do you think, for TARP, or will there be other people and other industries lining up?
You don't know. I think the latest numbers are there's $110 billion left of the original $700 billion.
Yeah.
I think it depends how long this recession goes on. I think it depends how deep it is. I think we certainly don't know. We've seen signs that are encouraging, but we certainly don't know that we're out of the woods.
What's your impressions of how well it's working? We have some people screaming and yelling all the time that this is a waste of money, that you're throwing good money after bad and all this type of thing. But, you know, in terms of the markets and where we are now, has TARP worked to stabilize things?
I think it's done some of the things that it was supposed to do. The financial segment seems to have stabilized somewhat. Mm-hmm. The question is, we've stabilized kind of at a lower GDP. We've stabilized at a point where the question is, where do we go from here? Yeah. So I think if you look at the government had two choices: do nothing and stand by and face systemic risk, or do something and try to stabilize the markets. The markets have stabilized. The question is, do they go up from here, or are we kind of in a holding pattern for some period of time?
And where do you think we are on that?
I think the latter. I think we're in a holding period. Pattern. I think it's unclear exactly what's going to be the real driver of growth going forward.
All right, good enough. Mark, thanks very much. Mark Degennaro is with us all morning long. With that, let's get back over to Ashley standing by in London. Back with his take on General Motors. I know that we started to have this conversation earlier, but I want to delve kind of into this situation now a little bit more in detail. So if the Journal's right and they get the UAW deal in place, more concessions from the union, does that help to avoid bankruptcy?
It certainly is a good step in the right direction, yeah. As you know, this is and we talked about it earlier today, it's a pretty complicated situation. You've got a lot of issues to deal with, and you've got a lot of competing constituencies.
Right, because you say that even though they have this deal in place, the odds of a bankruptcy are still very, very high.
I think they are. Like, I think at the end of the day, they're going to be able to shed certain or sell certain brands. I think they're going to be, it sounds like, reach a deal with the UAW. I think they're going to be able to close some of their dealerships. They've still got $27 billion in outstanding debt, and right now the bondholders haven't budged. Now, this may help the bondholders come on board, but who knows? If you look at Chrysler, I think it's a little bit of a template for what's going to happen with GM. I think we're going to probably see a deal reached with the UAW. I think they're going to go back to the bondholders. They're going to try to negotiate, try to get to a resolution. They may or may not go into bankruptcy. My best guess is that they're going to end up in bankruptcy.
No, one of the things, so that the bankruptcy would still happen, one of the things we talked about is that the General Motors bondholders are unsecured, meaning they're lower in the pecking order than the Chrysler bondholders who were secured. Do they have more motivation to get a deal done before the bankruptcy as opposed to taking their chances with the judge?
I certainly think they do. I think there's a good chance that they could end up with nothing in a bankruptcy. And right now they're being offered 10% of the stock. I think what I hear from them, the fundamental issue for them is they feel like they're being treated unfairly. They have $27 billion of debt. It is higher in the capital structure than other constituencies, and they think that all of the burden here is being put on them.
But even if they are treated unfairly, and that may be the case, and I know that that was the case that was made in the Chrysler bankruptcy as well, won't they come to the sense of reality of something's better than nothing at the end of the day, or no?
I think they should. Whether they will or not is an open question, but I think they should, and I think at the end of the day, if they don't, there'll be a bankruptcy. At the end of the day, if some of them don't come along, there'll be a bankruptcy.
So what happens in the bankruptcy to these bonds? I mean, you deal with this type of stuff, and you've seen companies go into bankruptcy before, maybe not something this big with General Motors, but what happens to those bondholders?
Most likely, if the company is sold off, put in a new company, those bondholders will get something. I think they're betting that they'll get something that's better than what they're currently being offered. Right. So the question is,
and for an understanding of who these people are, is it your understanding that a lot of these bondholders in General Motors are, have gotten into the bonds recently? In other words, have bought them pretty cheap compared to where they are?
It's all over the board. It's a mix of institutional and individual investors, and they bought it at various times, over the years. So
because that would change your motivation, wouldn't it? If you bought the bond at, 15 cents on the dollar, I don't know what they're trading at. What are they, 8 or 9 cents?
It certainly would. If you bought it at 15 cents on the dollar, you have a different mindset than if you bought it at a dollar on the dollar.
Right. Exactly. Yeah. Exactly. So some of those longer-term guys are really taking a huge haircut, whereas some of the short-term traders that are in and out of these things more. So it'll be interesting to see. We have until June 1st. Your bet is that bankruptcy is still an option that is the most likely of the options. What do you think could happen to change that between now? Is there an event? Is it just negotiations back and forth? There's something that could happen to change it.
Everything's been lined up where it's headed down that path. And if you look at some of the things that the government has done, it's clearly lined up for a bankruptcy. The only thing that's going to stop that is if all of the constituencies come together prior to June 1. I don't see that happening.
No.
Could happen. I don't think it's likely.
All right, good enough. Mark, thanks a lot. Let's get back over to Ashley now.